This is David Evans of quantumindicators.com, and in this video I'm going to go through the DV indicators function within the DV indicators for Excel tool. So this function allows you to check the performance and current signals for a number of indicators on any market that you can download through through Yahoo Finance. This tab here allows you to choose your indicator, and there's a multitudes available, which I suggest you have a thorough read of the welcome pack to familiarise yourself with the pros and cons and the different strengths of each of these. But perhaps some of the more famous indicators available is the DVB, the DV bounded indicator, and the DV oscillator, which are very powerful short-term mean reverting indicators, which means that if the market has moved too far too quickly in one direction, it's likely to go back in the other direction. But what these indicators do very well is define just where too far is, or how too fast is. So this is the interface you've got available, and you have a number of options. You can choose to download the data dividend adjusted if it's a share or an ETF like the S&P 500 tracking ETF, the SPY. So we can tick that to have that or not, and you can see what difference that might make to the data. You can choose to have real time, which means that the market will tell you what the current signal is right now, and that's useful if you wanted to trade it, which I'm sure you would do based on the actual closing levels. So when you get to you've done your research and you think you found a good angle, then you might actually you need to know what the current signal is before the close, so you're able to act on it. And this real-time data will allow you to do that. Some of the indicators can be adaptive, so this means that you can adjust them, that they automatically adjust depending on market conditions. And you can check how this works. Does it improve things? Does it improve things in terms of risk reward, but not necessarily the absolute return? So that's something you can play around with to your heart's content. What I'm going to do now is download the performance for the DV oscillator. Right, so what it's done is it's downloaded the S&P 500 ETF SPY. We've got the open, high, low, close levels, we've got the volume, we've got the DVO indicator levels, and we've also got something called detrending. I won't cover this with this indicator, but I'll do it in another one. Signal, 1 for long, -1 for short, the daily return, and we've got the simple returns, which effectively means that you wouldn't carry over any profits from the previous day, and compound returns, which kind of self-explanatory. And here we've got the performance metrics over 250 days and since inception, well, since about 2002. So you can see how it's doing in the longer term versus the shorter term, and then a number of risk metrics such as the Sharpe ratio, the max drawdown, the average percentage of trades that win, the average trade, and the average size of the winner to the average size of the loser. And we can see here max daily drawdown and minimum daily. So we can see maximum daily profit versus the maximum daily drawdown. So this gives you an idea. You make sure that yes, you might see some headline returns, but you don't want that to be due to just one big spike. Right. What this allows you also to do is play around with different variables, so we can see the impact of cost. So if we're playing even just something as little as 0.02%, does it still stand up? Cost each side, yes, it does. I mean, obviously it takes a chunk out of it. So if for whatever reason your broker makes you pay, let's say 0.09%, then performance takes a dip. So if you're having that, then maybe you'd have to look at a kind of model which has less transactions, taking the signals more sparingly. Right, so let's put that back. What you can also do is check the performance of long trades versus short trades, or play around with the entry points. Now the standard entry point for many of these variables is 0.5, which is the same as 50%. the reason is because most of these indicators, but not all, are bounded, which means that their scores will vary between 0 and 100. Or put it another way, it's between 0 and 10. So the 0.5 is about 50% is halfway point. So think of that. So 0.5 is the halfway point. So generally the systems go long below 0.5, which means that the indicator value is dipped, which implies that the market is oversold, and it goes short when the market is over 0.5, which means the market is overbought. So now if we wanted to let's look at changing this around. So we only want to look at how the performance is impacted on one side of the trades only. So how can we do that? So we need to trick the data a little bit. So if this is going currently long and short, but let's just say we tell it to go short, only the market only going above 5, but it's never going to go above that because it's bounded between 0 and 1. So if we put a number in that it can't reach, then we can see that it will never go short. So this is the performance of the long trades only. So we can see that the performance is pretty good. The maximum drawdown is 21%, fairly high winner trade, and average trade of 0.44%. But the average winner is actually smaller than the average loser. And similarly, we can get to short trades only. So if we're going long only when it reaches below a certain level, and remember it's only bounded between 0 and 1, or 0 and 100 in other terms. So we put -5, it'll never go long. And here's how the performance of short trades is managed. You can see that obviously in a bull market like we've had since 2000, the depths of 2008, it's going to struggle because there are not many. There's not been hardly any decent sustainable bear markets. But what it does is very well is when there is a bear market, allow you to capture those profits nicely. So we can see in the last 250 days, the short trades haven't really performed that well, whereas over the longer term, it's a lot better. The drawdown is still highly respectable, but what you're getting is a higher winner to loser ratio. Right, for fear of making this video longer than it needs to be, what I'll do is just show you one more indicator to demonstrate the function that allows you to detrend it. So the reason we have this function is because in a long trending market, then you're, especially on the indicators which aren't bounded, which means that they don't have a top or a bottom score. So another example of this might be the RSI, which can vary much higher. And the DVU is the unbounded version of this, which means the RSI is bounded. The DVU, which could vary in score considerably. So here we can see it's minus 0.04 to 0.5 or minus 0.6. And in a strong uptrend, that value could get skewed. So if you have a number of days where it keeps on going up and up and up, the indicator might get a bit confused and keep signaling you that you need to go short, whereas actually it's quite a strong uptrend, and that's actually not going to perform very well. So what the detrending does is adjust the indicator value for the current trend. So here with the DVU, again, this is best applied to those indicators which aren't bounded, but you can play around with things with the other indicators as well. So this is the performance of it with it being detrended. Now let's stop that detrending, and we can see what it's done is very usefully, without this detrending, the indicator has been flat for a long while. But with the detrending, it's managed to eke out some profit, because now with the detrending, it's adjusting for that uptrend. Okay, I hope that helps you. This has been a brief overview of the DV Indicators panel within the DV Indicators plugin. I'm David Evans from quantumindicators.com.